we're looking at common questions. Okay, I have actually listed down, I've been looking at some of the questions that we've been asking in the group. I think the guys are doing a fantastic job answering your questions. If you do have any further questions as you come along in your trading journey, make sure you do ask. Remember, those are the 4 points I shared with you at the last session. You have to always ask questions, review your trades, make sure you practice. Okay, and the best way to do that, make sure you join the LCMS Traders Club, $199 a year. And also on next Friday, we're going to be doing a live trading event for non-farm payroll. I do think that there are going to be quite a number of trading opportunities at that point. So of those common questions that I have listed here, one thing through my years of experience when I'm teaching students on fundamentals, first question a lot of people ask is, how far back should I look at economic data? How far back should I study this economic data to get an idea of where the market should be heading? My answer to that on how far back to look is that you shouldn't look too far back. What's too far back? Look a month, 2 months, 3 months at the most. Build your experience from here onwards. It is not going to be worth studying years and years and years worth of data, of past data. It's more important that you start at this point, start picking up, start understanding all the economic news or the economic news that I've highlighted to you, and build that bias, build that judgment from this point onwards, rather than all that effort from trying to recap on what happened before. I hope that makes sense to you, because it's the number one question I always get: how far back to look at economic data? Second question I always get is, why doesn't it always move as expected? So imagine now you see a good employment number coming from Australia. A good employment number coming from Australia, you expect the Australian dollar to go up. But in fact, you actually saw it coming down. So why doesn't it move as expected? It could be several reasons. One, it could be that the trend is going down. Trend is going down. So you might actually see a short move upwards before that move downwards, because it follows trend. So that could be one reason why it doesn't move as expected. Other reasons, it could be that there were external factors influencing that number. Say, for example, in another scenario where you see a very bad US number, you see a very bad US employment number, and you wonder, this should be a weaker US dollar. But in fact, when it actually happens, news comes out, you see a stronger US dollar, you sit there and you go, wait, it's not moving as expected. What's happening? It could be bad weather. It could be bad weather, it could be policy, it could be strikes, and all that is being factored in. People might have been able to price it in to understand that with the trend and external factors, it might not always move as expected. And if it doesn't move as expected, what should you do? Stay out. My best answer to a lot of situations where you don't understand what happens in the market is to stay out. Don't jump into a trade just because it is a good news. Don't jump into a trade. I'll repeat that again. Don't jump into a trade just because it is a good news. It might be going down and you say, it's a great news, let me buy. That'd be the worst thing you can do. If you think it should be going up, but it's actually going down, stay out. If you think it should be going up and it is going up, then that's where you get into the trade. Okay, so that was the second question. The third question is, do people manipulate news? Do they manipulate news, and is it mostly priced in? The way I look at it, the market is $5 trillion a day. It's very, very hard to manipulate news. It might be priced in a little bit because a lot of people take a projections and they commit to that projection. So sometimes it could be priced in a little bit, but there are still opportunities if you follow the steps. You look at the news, you understand what it is, you base it on previous and forecasted data, and then you make sure you go through the rest of the steps: the trend, the support, resistance, the price action, which is the indicators or price action levels, and then you make sure you manage your risk. Although some news might be priced in, you will still be able to take advantage of those moves. The second last question I usually get is, what about other news? I've only identified 7 news items here for you because I really do only look at these 7, and I do believe that I've tried to keep it very short, sharp, and simple for you. Can other news items move prices in the market? Yes, for sure. But is it easy to trade other news items? No. Why? For example, retail sales number. Retail sales numbers across all economies can move prices quite significantly. But retail sales numbers are going to be affected by seasons. For example, we're going to see very good retail sales number in November, December, and possibly even January. Christmas periods will generate very good retail sales number. Those are going to cause a lot of different volatility to the markets, to the prices, which is likely to cut you off guard. Other news items such as trade balance, and every country releases a trade balance number. It could move markets. It's more likely to move markets in a longer period of time. As you trade, you will understand that you are looking at a short to medium term time frame. You are not entering trades for months on end. Trade balance numbers are numbers which indicate long-term numbers. So although trade numbers can move markets or give an indication of how markets are likely to be heading, trade balance numbers are very inconsequential to a lot of retail traders. And the last question I'll answer is that a lot of people ask, which ones are more important in that pyramid? Central banks, governments, banks, businesses, or households? 7 news items. I would say that although central banks do have the most power to influence everything that feeds down into the market, it also comes from how households behave. Central banks will look at employment data to make their decision. Central banks will look at consumer sentiment to make their decision. Central banks also do look at PMIs, Purchasing Managers Index, how businesses are performing. They don't look at building permits, but they look at how the overall market, the whole overall economy is performing, and they look at GDP. So because of this, I would actually say that although we have that pyramid there to help you rank all the 7 items, I would actually approach all the 7 items as an almost equal weightage. Just the understanding that employment numbers are probably going to last a little bit shorter. The impact of employment numbers is probably going to last a little bit shorter than the impact of central banks' decisions. All right, so focus on the 7 news items. I hope you will go through these slides again. I hope one thing I want, if you are serious about your trading, and I hope you do this, is go through the news. I've seen some questions about asking what's the impact. I've seen some questions about asking how does this apply to the charts. I've left it there for you because I didn't want to go through all the different news items 20 different charts, but something for you to do. Go through the news, maybe last 2 months worth of news, and look at it. When that news was being released, interest rates decision for New Zealand, it was just happened. What happened to the New Zealand dollar? When you look at the employment data coming from the UK, what happened to the pound? When you look at CPI numbers coming from the US, FOMC statements coming from the US, what happened to the US dollar in general? I'll give you the answer straight away. When New Zealand came up with their interest rates decision, where they kept rates on hold, but spoke about negative rates, we actually saw a massive weakening in the New Zealand dollar. Traders Club members, remind you, please go watch the video. I did that right as the news came out, highlighting different parts of that statement for you to get into a trade. I know that a lot of you have jumped into that trade and made good money. With that said, I hope that you tune in, turn up, and participate in the next session that we're going to have next week on Tuesday. We'll be going through a technical analysis. A few things you have to do leading to that. Get your MetaTrader 4 installed and properly set up. We'll be going through how to identify trends. We'll be looking at support and resistance levels. I'll be giving you my customized proprietary indicators that I use even till today. And we'll be going through all the different examples that we'll be working through next session. Look out for the upload of the indicators that we'll be providing into the group. If you don't know how to install it, you don't know how to apply those indicators, look out for the guidance video on how to install your MT, or you already have the MT4 installation video on how to apply those indicators and templates to your charts and your trading platform.